Hi there, welcome to Grain TV. It's Tuesday, December 20th, another down day in the markets. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, beans losing again sharply, losing 16 cents on the day. That's a 30-cent loss combined between Monday and Tuesday. Corn off 3 and wheat off 2. Really, we continue to focus on the weather situation. We'll talk more about the outlook in South America. First, let's start with some news in wheat, and that is Egypt was in the market for more wheat this last night, and then the announcement was made today. And overall, it was pretty much the usual list of suppliers. Russia and Romanian wheat got the deal, but also in the mix for the first time in a long time was Argentina. And we've been talking about Argentina's crop coming off and how farmers are aggressively selling, or had been aggressively selling, that crop, and we're seeing the effects of that. Their bids going into that deal were well below Russia, coming in about 173 a metric ton versus Russian at 186. When you factor in freight to Egypt, they were on par with each other. But what it means is Argentina is a stiff competitor in the world market now compared to what they were before harvest. So again, we see Australia heavy in wheat right now after their harvest. Argentina heavy in wheat. I think that's going to continue to weigh on the wheat market as we go into 2017. But really, right now, everyone's watching the weather forecast in South America. And we talked about this yesterday. The weather forecast for the middle of this week into the weekend is favorable for Argentina, which has been dry. We didn't see much revision in that today's model run, but we did see a little bit less rain and a little bit less coverage in the midweek to weekend forecast for Argentina. But still, overall, 65 to 80% coverage in this weekend to early next week situation, with fairly wide rain spread coverage. So, overall, the market's really trading this. I'm not sure Argentina's out of the woods yet with this rainfall. They're still early in the growing season. We're not quite yet to pollination, but it's certainly enough to get the market shooting sharply lower. Let's take a look at the export situation, because we've got two factors that are sort of going on here. One, obviously, the further we get down the road here and get closer into late January, the more we're going to face competition directly from Brazil, and less so from Argentina. But Brazil's early beans are expected to be off in January. And then the second factor we got going on is, since the election, the U.S. dollar has been on a torrid pace as traders look for a robust stimulus in the economy, and as a result, we've seen the U.S. dollar shoot sharply higher. So when we look at the competitiveness of U.S. beans versus Brazilian beans, we can see it's changed markedly in the last 6 months. This is a chart that shows Brazilian soybean price versus the U.S. soybean price in U.S. cents per bushel. So, when you see it in June, July, that's when Brazil's price was at its peak relative to the U.S., and you can see it's come down. And obviously, we're trading around zero. So basically, our price and the Brazilian price is on par with each other. Compare that to the same time period last year when we were 40 cents stronger than Brazil's price. So I think there's some room to the downside here. In other words, I think Brazil's price is going to start to fall even more so as they get closer to harvest. And, the strong dollar is certainly not going to help our situation. So, we've certainly fared well coming out of harvest in 2016 in the U.S. Chinese demand was exceptionally strong. It continues to be robust. There's no hints at the chink in the armor. They continue to have strong hog margins there. They continue to buy a lot of beans, but I think their buying patterns are going to start to switch pretty aggressively to Brazil, and we can see price competitiveness. We've lost some advantage here since the election, when we were 40 cents a bushel cheaper than Brazil, and now we're pretty much on par with Brazil. And of course, their harvest is coming just a good month away, so it really spells problems, I think, for the U.S. soybean situation. Speaking of that, we had soybeans really trade sharply down today. Again, that's 30-cent loss on the 2 days combined for the start of the week, breaking below that 1020 mark that we've been talking about for the last 3 weeks, getting down to the 200-day moving average. Right around 1006 is where we closed today. So, this is certainly a bearish reaction here, a bearish movement in the market, and breaking down below 1006, I think would just be more signs that we're probably going to continue to move down. For those of you that are interested in trading alerts, we have our technical trading alerts we put out every morning and give them through our clients on our web portal. You can see this morning going into the morning break with the market around 1010, we called for a move to go to 1005, and that's exactly around where we closed today. So overall, it's been a day of down projections here. The market just continued to trade lower and really closed at the low of the day. I think it's going to be hard pressed to see any sort of sharp recovery here unless the weather patterns change substantially from what we see in the latest weather runs. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain marketing situation, visit us online at grainhedge.com.